students, today we will take an example of a stock in the energy sector and show you how we analyze the stock from an education perspective. We will cover several parameters such as business model, management pedigree, competition, growth drivers, financial strength, and risks and concerns. Let us first give you a summary of these factors. Indian Energy Exchange (IEX) is the premier electricity exchange in India, which facilitates the trading of electricity. It currently enjoys a monopolistic situation in the space owing to its network and technology effect. The company has strong leadership and has successfully launched several new products such as real-time market, green market, cross-border trading, term ahead market, and long duration contracts to drive the growth of the company. It has also undertaken new initiatives such as Indian Gas Exchange and International Carbon Exchange that will deepen its offering and moat. Several other macroeconomic reforms in the sector have helped the company grow at a very fast pace. One of the key risks that the company faces is that of a dreaded competition from PTC India, which is setting up its own exchange and currently accounts for more than 20% of the volume of IEX. Coming to the financials, the company's net sales have registered a CAGR of 17% in the past 5 years. EBITDA registered CAGR of 21% and profit after tax grew at a CAGR of 22% over the same period. Further, the company's zero debt to equity position, fantastic return ratios, and strong free cash flow generation in line with profitability growth makes it fundamentally sound stock. The stock has corrected from the highs of Rs 300 and trades at Rs 155, which is 41.9 times its FY23 estimated earnings and is now fairly valued on the valuation band. The stock has reacted from the demand zone of Rs 137 to Rs 68. Indian Energy Exchange is the largest and the first energy exchange in India, providing an automated trading platform for the physical delivery of electricity, renewable energy certificates, and energy saving certificates. The platform provides efficient price discovery, which increases the accessibility of power markets in India. There are more than 73,000 plus participants registered on IEX from 29 states and 5 union territories. Further, 55 plus distributor companies, over 600 electricity generators, 4,400 plus commercials and industries, 1,500 plus renewable energy generators, and obligated entities are registered to trade electricity contracts. Product offerings of IEX include day-ahead market, real-time market, term ahead market, green day-ahead market, and green term ahead market, renewable energy certificates, energy saving certificates, and cross-border electricity trades. IEX has an economic mode of enjoying a monopoly in power exchange due to the network effect and technology effect. As of 9 months of FY23, it enjoys 99.5% market share of day-ahead market, 49.2% market share of term-ahead market, 100% market share of real-time market, and 84.8% market share of green market, 58% of long-term duration contract market, and 88.6% of the overall market share. From FY23 till December 2022, day-ahead market contributed 52% of revenue, real-time market contributed 26%, term-ahead market contributed 10%, green market contributed 5%, and certificates contributed 6% to its revenues. As a part of its new initiative, the company has started an automated platform, Indian Gas Exchange (IGX), with cutting-edge technology. It helped in creating an efficient and transparent marketplace for gas sector participants, facilitating indigenous gas price discovery and investments across the value chain. In FY22, it traded 1.2 crore MMBTU and achieved financial break-even. Prominent leaders in the petrochemical sector such as BPCL, IOCL, IGL, ONGC, Indian Oil and Adani Gas Private Limited, amongst others, joined IGX as members during the year. Recently, IGX received PNGRB approval to commence domestic gas trading. This approval will lead to a new opportunity for domestic gas sales and price discovery through exchange market besides increasing the sell-side liquidity. On December 22, IGX launched the GIXI Gas Index, which is a volume-weighted average price for all gas traded on any day. It helps the market participants to know inland gas prices and to take suitable decisions, and is a precursor for gas futures which will help stakeholders in hedging. Besides the gas initiative, IEX has also started International Carbon Exchange, which will enable participants to buy and sell voluntary carbon credits at competitive prices through its transparent and reliable exchange platform, thereby helping large corporates meet their ESG requirements. Today, a large part of carbon credits is traded on bilateral basis. Exchange transactions are only 20 to 25%. IEX is helmed by a strong management team led from the forefront by Mr. Satyanarayan Goel, who has academics in electrical engineering and business administration. He was the former marketing and director of operations at PTC India and has been involved in various reform initiatives in electricity by the Government of India. He has 40 years of rich experience in different areas of power sector and has successfully enlarged the IEX portfolio of offerings and has undertaken several digital transformation initiatives, leading to a significant growth of the business. However, the management compensation is 2.5 times of sales, which is higher than most small cap technology driven companies. The company has multiple growth drivers in place, which would increase its trading volume in the future. The drivers are as follows. Expansion of production-linked incentives (PLI) scheme for solar cells and modules manufactured domestically. Infrastructure status to be granted to battery energy storage systems, use of biomass pellets in thermal power generation and distributed renewable energy systems. Issue of sovereign bonds signaling government intention to pursue climate action. Target of installing 500 gigawatts of renewable energy capacity by 2030, and India's initiative to produce 5 million metric tons of green hydrogen annually by year 2030. Government push for adoption of EV ecosystem, shift towards electric cooking, higher penetration of exchanges in power market. Currently, exchanges contribute to sales of 7.7% of total power generation compared to the global average of 30 to 80%. Transition to short-term power market due to abundant supply of power, thrust on renewables, lower transmission congestion, cost rationalization by discoms, etc. Increasing consumption of electricity, which is estimated to be 7% CAGR from FY23 to FY30. The government's vision of increasing the share of natural gas in the total energy basket from close to 6.3% to 15% by 2030. Increasing infrastructure setup for LNG and substitution for import of gas. Inclusion of natural gas under GST and reform initiative by regulator PNGRB. Increase in carbon units traded globally by 3 to 4 times from 500 million units to 2,000 million carbon units. Launch of real-time market, green term ahead market, and long duration contracts has broadly doubled IEX opportunity to 150 billion units. Entry into the capacity market and ancillary market will also drive growth. Vertical diversification through gas exchange IGX provides IEX rupees 5 to 6 billion with new market opportunities to grow. Implementation of virtual power purchase agreements, and lastly but not the least, P2P electricity trading between prosumers. Key risks of investing in the company include changes in regulation related to prices can impact margin and earnings. Volatility in power demand and supply can impact the prices at which power is bought and sold. Entry of PTC as third energy exchange provider can impact IEX volumes as PTC contributes 20% of its volumes. IEX net sales have registered a CAGR of 17% over the last 5 years from Rs 199 crores to Rs 431 crores. The increase in revenue is due to a structural shift from long-term PPA market to a spot market and the aggressive launch of new products regularly. Since FY21, the volumes have seen a sharp rise led by real-time market. Further, gas exchange volumes have increased substantially. Although prices at IEX almost remain range-bound, recent liquidity constraints leading to supply volumes being less than the demand has shot up the prices substantially. The onset of summer demand, elevated imported coal and gas prices, record low coal stock at power plants for this time of the year, and weak financial health of discoms resulted in a supply shortage. However, improvement in coal production and higher inventory is expected to reduce supply constraints and soften prices in the near term. The company's operating expenses have grown merely at a CAGR of 4% during the last 5 years and kept the EBITDA margin at an average of 80% over the last 5 years. Although interest expenses are low, higher other income on the back of higher other income from interest income, sales of investments, and fair value gains on investments have kept the profit after tax growth elevated, registering a CAGR of 22% over the last 5 years. Furthermore, with insignificant capex, a negative working capital cycle, free cash flow generation mimics the growth in profitability. The company is debt-free and has a fantastic return on equity of over 40% and return on capital employed of more than 50%. On the valuation front, the company is valued at an average valuation on the price band and trades at 41.9 times its FY24 consensus earnings estimate. The stock has corrected from the all-time high of rupees 320 and trades at rupees 155. The stock has reacted from the quarterly demand zone of rupees 137 to rupees 68. Kindly note, we do not give any recommendations or advice. Students who wish to learn further can do their own analysis or consult a financial advisor. This is Viral Shah signing off. Happy investing.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing. Thank you.